One thing that we normally do see is when we have lower metal prices, such as silver, is these companies aren't able to build their pipeline of future material. They just have to kind of stick with what they're mining now. The price, continues around these levels. They're just not going to be able to produce it anymore.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. We're going to be digging into the silver supply, some of the issues that arise as we see silver below $22. Quite a bear market for the last month or so, actually nearing the cost of production for some of the primary silver miners. Again, a lot of the silver coming from non-primary silver mines. So a complex equation. Although fortunately, to dig into that, I have two experts on the supply side because they are representing one of the companies, Sierra Madre, that we're counting on to find gold and silver projects, get them into production. So joining me today is Alex Langer. Alex, how are you, my friend?
I'm well, Chris. Thank you so much for having us. How are you doing?
I'm doing well, and it's great to have you back on the show. Also with Greg Liller today. Nice to see you back, and you have some news since then that we'll be digging into today as well. So good to see you. And how's everything going with you?
Well, thank you. Thanks for having us back.
Well, it's good to have you back on here. And Greg, why don't we start with you? Can you walk folks through the silver supply where we see it's getting close for the primary silver miners? Again, there's a lot of the silver, 70 to 80%. Most of the estimates I see coming from non-primary silver mines, companies that are mining copper, lead, zinc. How does the lower price, does that affect them at all? How are they looking at this? And what would you say about the silver supply as we see the price getting close to cost of production for some of the miners?
Well, the big copper porphyries, copper's the driving economic component there. So the silver is just a byproduct. That's why it's called a byproduct. But I think interestingly, there's some issues arising now in South America, Chile and Peru, regarding the big copper mines. And it could significantly impact the production of silver if some of these mine stoppages, and I believe it's in Chile, they've disallowed now an expansion at one of the big existing mines. There's some issues too in Peru. So you get some of those shut down, that'll really impact the overall silver supply side.
Well, it certainly doesn't make an easy environment from that side. And Alex, you're on the market side a bit more. We see the Fed raising interest rates, which is making things difficult for a lot of businesses. You would think that could have some impact on copper producers and others. What would you say there?
Yeah, absolutely. So one thing that we normally do see is when we have lower metal prices, such as silver, is these companies aren't able to build their pipeline of future material. They just have to kind of stick with what they're mining now. The price, continues around these levels. They're just not going to be able to produce it anymore and start to lose money. Where there's a higher, more robust price, they have a longer lead time. They're able to invest within the business like anything else, where you're just, on margins month to month. But if you're making a bit of profit, you can start to invest in the business, to make it viable for future months or future years. So similar to mining, same type of thing.
Greg, we see that at least at the moment, copper price, quite a rally. Like many of the commodities, it's soared. And does that change the decision? Or when you see a spike like that, does a copper producer say, we need to see this for longer? Or at the same time, they see their costs rising. So not an easy equation, but how do they look at that?
Well, they're restricted by their plant size, regardless as to how big your mine is. Your plant, only has a certain amount of capacity. So it's different. You can't expand beyond that capacity without a large capital investment. And like I said, in some of these Peru and Chile, it's kind of up in the air about whether they want to invest more, or if you can even get the permits to expand. So there's a real issue there with the primary producers. As the price goes down, you raise your cutoff. And after a while, what had been ore, say at $24 silver, it's not ore anymore. So you tend to do your development around it or mine the high grade around it, and you effectively sterilize what had been ore 6 months ago. So there's an aspect to that goes on. And then if price does go up, can you go back after what you left behind? I remember back in the early 2000s, I had Newmont, a bunch of Newmont geologists to one of my projects, and I asked them, with these prices with that your underground mines in Nevada, how many ounces are you sterilizing? And I didn't expect an answer, but they came right back and said, for every ounce we mine, we're sterilizing an ounce and a half. So, yeah, there's a lot of issues that are coming into play at these prices.
And how does that ultimately play out? You've seen a bunch of these different cycles. What do these markets look like in 2 or 3 years with the current dynamics? Is there some sort of break point, or where does this go from here?
Well, I mean, with all the electric vehicles, solar panels, I think we talked about solar panels last time. Anything that's electronic uses silver in the electrical connections because it is one of the best conductors around. So how much of the stuff you buy every day has some sort of electronics in it? And you compound that by what, 7 billion people in the world, even in the underdeveloped portions of the world. I mean, I remember being in Botswana, 120 kilometers off a paved road. There were a bunch of mud and wattle huts, and it seemed like everybody in the whole little village was sitting out in front of their hut, fiddling with their cell phones.
Yeah.
And I mean, it's just, and Botswana's done a great job with developing their cell phone coverage. But I mean, it's just, there's so much of it in small quantities that's being used and not being recycled that I've never seen anybody really try to quantify that. But everything that you buy that has electronics in it has some silver.
Yeah, and certainly, as you quite well point out, pretty much anywhere you go, people are sitting there on their cell phones. So it doesn't seem like the demand for silver getting much lower. Alex, when we look at the charts of some of the other commodities, you can see zinc maybe rebounding a little bit, but still higher. There's the nickel chart. I mean, a lot of these are all 5-year charts. So we see that 2020 around COVID, similar spike higher. We have not seen that in the silver price. There's aluminum, a spike higher, natural gas, spike higher. What are you seeing in this whole commodity sphere? Anything you could add here in relation to some of these other commodities versus silver?
Yeah, absolutely. Well, first off, any of the energy materials become more expensive. We're seeing that right now, crude, natural gas, things like that. So the production and the cost for silver, any other material is going up. Anywhere you look, you go to your gas tank, you go to your gas station, try to fill up your gas tank, you're paying a lot more than you were. It's the same as any business, right? You're gonna have costs associated with that. One thing that we've seen with this increase in price of some of those other nickel and zinc and things like that are really related to the idea of battery materials and battery metals and longer clean green economy. One thing that's quite prevalent within those materials, again, as Greg just mentioned, is silver. Right? We haven't seen the rally in connection with, again, zinc or aluminum or lithium or any of these other commodities, even though silver is a massive component of pretty much all electronics and EVs and EV trucks that are going to be coming online. So we've seen this rally, and honestly, I don't think we're going to see any drop in pricing significantly on any of those other commodities, the battery metals, and silver is going to be lumped in there soon enough as people realize that supply of silver is becoming more difficult to get. And I know we just acquired an interesting project we'll get into a little bit, but you'd be surprised at how many people reached out instantly after that announcement to try to get their hands on physical silver. And I'll get into that a little bit later if we want.
Yeah, actually, could you talk a little bit more about what the investment appetite is right now? Obviously, differs in institutional versus retail. I know some people are frustrated by the price, but what are you seeing on that side?
It's difficult everywhere, to be honest. We see it right now. The Nasdaq is down quite a bit. A lot of this is being pushed by what's not happening at the Fed. So people are hesitant and they're pulling out their money into cash. So it happens everywhere. What we see is institutionally, those people are longer term and they have a vision and they'll kind of wait it out 3 to 5 years or whatever their mandate is. On the retail side, it's tougher. It's our money. We're a little bit more emotionally invested. So we're buying and selling, and we're following it every day. So again, what we see is for good projects and good people, there's always capital available. And same for anything else. If things are, a little bit of uncertainty, that's where people are selling because, people get scared and prices go down.
Yeah, I can understand that. Although we did have a new report out from the Silver Institute. Interesting, you see in this field here, this is the net physical demand. So it was up 36% in 2021, a year when the price fell. Also, we see mine production rising a bit in 2021 after coming back from COVID, but again, that 36% number, it seems like people are noticing the inflation and turning to silver. Maybe we have a pause in that while the Fed's raising interest rates. It seems like a lot of people are starting to think they may have to reverse this, but you are seeing the industrial demand grow and the net physical demand. So Alex, any thoughts on that?
No, I agree. When I mean cash, people, getting cash, it's buying something that they feel has value. That could be silver, that could be gold, that could be bonds or anything like that. So again, as we've seen, people believe in silver. It's not just a store of value, it's also a much needed metal. So again, within these markets, people are trying to acquire net physical silver, and it's difficult. I know we've seen a bunch of your shows, and people are paying a premium for silver over the quoted spot price right now. And this is one of the reasons.
Yeah, you're definitely right. I was looking at some online pricing for some silver coins. I'm seeing silver pandas, $35.
Yeah.
Like, wait a second, isn't the spot price is sinking below 22? So a diverging spread there. Greg, have you seen anything this extreme in your time following silver in terms of that wide of a divergence between these COMEX spot price and what people are actually paying for physical metal?
I don't think so. I haven't followed it that closely, but just in what I've been reading, people are having a hard time finding coins. The mints are having a hard time finding the what they call them, the blanks, that they print them on. But no, the spread's really quite high right now, and that's obviously it's a reflection of the premium that the sellers of physical can charge because they're it's tight. Supplies are tight. But back at that chart, it's really evident that there's a deficit. There's a production deficit to meet demand, and it might be more extreme than that chart shows, because I think we talked about it last time. You've got these guys that the mine produces X amount of silver and they report production is X, and they turn around and they sell the concentrate to a smelter, and the company that's doing the smelting reports their silver production out of the smelter. So it's being counted twice. And, I'm not sure anyone has an accurate picture as to what silver production really is. But I think it's probably less than what is being reported, just because of this double counting that goes on between the mine production and the actual silver production from the smelters and the refiners.
And as you pointed out, we have a deficit 2019, 2020, again 2021 when the price fell, forecasting a deficit for 2022. Do either of you have any idea of where the metal comes from to fund that deficit?
I don't know.
That's the big mystery. Greg, any
Yeah.
thoughts on how they're meeting that deficit if these numbers, I mean, if they're double counting, would be even more extreme?
It's got to be coming out of the investment stockpile. And I don't know of any organization that tracks either gold or silver loans. Gold loans aren't as common as they used to be, but it used to be real common for a financing mechanism for someone to borrow the gold, the physical gold, and sell it, and then repay it back at a later date. You got a better interest rate on it than you could get out of, say, a bank. And how much of that's going on in the silver sphere, I don't know.
I think it's a lot.
Yeah, and there should be rules that you got to report this stuff, but there's not. The deficit has to be being made up somehow. And the only thing I can think of, it's got to be coming somehow out of the investment stockpile in the form of a silver loan of some kind.
Well, Alex, isn't that what we saw last year with Silver Squeeze, where you had that 120 million ounces allegedly go in a weekend?
Yep.
And we found out later there was a miscount. I called iShares trying to get the audit. No bueno on that one. So it is interesting. Really, the only time we've had anything resembling an attempt to have physical backing of these paper contracts was when the Hunt brothers tried to get delivery of their metal. And basically, it blew up the market back then. They had to change it so that customers could only sell and not buy. Certainly a fair and free market. Although, Greg, you told me last time that you were actually part of a project that was funded by the Hunt brothers back then. And I was wondering if you could share a little bit more about that.
Yeah, it was I worked for a company that started out as a series of limited partnerships. They got into silver early in the 70s under the same idea that the Hunt brothers did, that there was going to be a real shortfall because silver had been, the price had been suppressed for so long for monetary purposes that the supply just wasn't out there, I think was the idea behind it. But anyway, the limited partnerships were Congdon and Carey limited partnerships, and they all got folded into a company called Coca Mines, which was who I worked for. And the Hunt brothers were part of, I believe it was 2 of the limited partnerships.
Well, certainly nice experience to have, especially as we head into this situation where we're at now. And in terms of silver supply, I'd like to congratulate both of you, because last week you did have an announcement acquiring the Guitarra silver gold mine from First Majestic, and would love to hear your thoughts on that. Greg, I know you have experience there and you've been thinking about this one for a while, so why don't you share your thoughts first?
Yeah, about I don't know, 2006 to January of 2009, I was president of a company named Genco Resources. And Genco had, its only asset really was the Guitarra mine. And 2006 was the time of my first retirement. And just a couple of days into it, a person I know is doing the capital markets for Genco asked me to come down and take a look at the project and see if I wanted to help them out. And I just went on a lark. I had no intention of working for a while. And I got there and I looked around, and it took me about a day going over the data and looking at the rocks. And I just went, this thing's a whole lot bigger than Ocampo, which was the project I just finished. That was a good size mine, produced several 100,000 ounces of gold equivalent every year for 8 years. Anyway, I felt that this was a lot bigger, and it had no reserves at the time. So it was kind of it was a hard place to be, but it was a lot of fun. And the more work we did on it, the more convinced I became that it was definitely one of the biggest overlooked silver opportunities in Mexico. The company blew up in the boardroom. I left right at the beginning of 2009, but I don't think a day's gone by since then. And I haven't wondered how could I possibly get my hands on this one again. So yeah, now we're there, and it really fits with our corporate objectives. It's the mine's fully permitted. It's been very well maintained by First Majestic. They start the ball mill motors and the other motors up, every month or two, just to make sure everything's still working. We had an engineering firm, KCA, come down and take a look at it, and they said the plant's in good shape. We can get it running with 3 of the 4 ball mills in very short order. Mostly it just needs some scraping of the rust and some steel patching work done, which is pretty typical. But it's basically ready to be turned on. The project comes with 2 fully developed underground mines. The switch would be ready to be turned on, except for the fact that there's about a 2-year lead time now on buying underground mining equipment. But that works fine with our plan, because that'll give us 2 years to do some exploration and development throughout the district. When I ran the project, it was I'd wanted to do a bulk tonnage open pit. That's no longer a feasible thing in the area, but I do think there is a good opportunity here to do a underground bulk tonnage type mining scenario to really get the cost down. And then there's a tailings opportunity here, because there's over 2 million tons that's grading around half a gram silver, or half a gram gold rather, and about a little over an ounce per ton silver. So if we can reprocess that, combined with the old mines, and get a new one, another new mine in production in the eastern part of the district, that's kind of our overall plan. It'll come together more definitively as when we close the deal. So no, I'm very happy. It's a great opportunity. It fits right in with what we've always said. We wanted Sierra Madre to be a mid-tier producer within the next 3 years, and have an inventory of between 50 and 100 million ounces of silver in the ground. And with this and our Tepic and La Tigra projects, we've laid the foundations to do that.
Well, congratulations on having your baby back. And Alex, you were bringing this deal together, also have a partner in First Majestic, and perhaps you could just walk folks through how this came about.
Yeah, absolutely. So obviously we've had our eye on this project for quite a while. We think the potential is excellent. As Greg mentioned, it's one of the top exploration potentials for silver in Mexico. So we've been chatting with First Majestic for a while. I've known them for a good amount of time. They knew about our history with the mine, and for them, they're doing really, really well. Some of their other projects, San Dimas and Jarrett Canyon, it was not as important to them for the time being, but they still really believe in the mine and wanted to push it along and make sure that there was the right group that would spearhead it, had the right access to capital that could, get this project, to, significant producer again. And so they entrusted us, and for that, we're paying them $35 million, and that's all in shares. They really want to be part of the mine moving forward, which is great for us. We have, $9 million in the bank right now. We're raising another 10, so we'll have a really good treasury to kind of push this project forward. And as Greg mentioned, we'll be doing exploration. We feel we can really increase the ounces. We'll be fixing up the mill a little bit. It shouldn't be that expensive. And also looking at these tailings opportunities as well. So generating cash flows quicker. And First Majestic really kind of agreed with our vision on what needs to happen. And it was just kind of a perfect fit, to be honest. They're super supportive. We were sending emails back and forth and working together. And yeah, we can't wait to get started. I shouldn't say that. We've started a while ago. We can't wait to really, really get started and to, give our plan and our vision to the market over the next few months here.
Yeah, I think it's nice, especially that it does fit your vision. And also you have experience with Greg being so familiar with the mine. Plus, interesting to think that 2 to 3 year timeline, you would imagine that the Fed has been reverse course and cranking their presses by then. So we will see how that plays out. I'd like to mention the press release, link to read the full details of that is in the description field below. Although fortunately, Greg and Alex actually recorded an overview of that with a little more detail, which is coming your way now.